Hi there, Nick Fenton with Ticker Tank. I am long a QCOM Straddle, and I just kind of wanted to go over the reason why I bought the Straddle, because I typically don't buy Straddles. I'm typically a net seller of Straddles. So overall, let's take a look at the chart. We're at the 1-year chart of QCOM here. Up at the top, we've got the price action in the chart, or in the stock, and below that, we've got the volume of the stock, and below that, we've got RSI, which is Relative Strength Index. So first thing to point out, we've got QCOM trading here in a pretty tight consolidation pattern with resistance right around 39.50, support right around 37.50, and recently volume has been pretty light. Haven't seen a whole lot of excitement with regard to volume, and this RSI Relative Strength Index has been right on the 50 line, which is kind of the neutral line. It's just been riding along that line. Not a whole lot going on with RSI here. If we take a look at the Bollinger Bands, another thing worth pointing out is the Bollinger Bands here on this chart are the blue lines. And what you can see is the Bollinger Bands are extremely tight right now since the stock's been consolidating for so long. Typically when the Bollinger Bands get this tight in QCOM, we see a widening of the bands pretty quickly. So in this case, we saw it get tight and it pushed to the downside swiftly there in QCOM. Another good example, the bands got tight right around here, and then we saw another swift downside push. Bands got really tight right here, and we saw a swift upside push in QCOM. So that's another secondary reasoning that I'm thinking QCOM is due for a fairly big move. And then lastly, we've got the EMAs. We're looking here at the moving averages, rather, at the 50-day, 100-day, and the 200-day. 50-day being blue, 100 being purple, 200 being orange. What I've noticed here with the 200-day moving average is since it broke below it, it has shown some resistance. We recently saw some resistance here, which resulted in a swift downside push. In this case, we're seeing resistance again, but today it actually got a little bit of a push above it on some decent volume. This could be an early sign that we're getting ready to break out of this consolidation range to the upside, but by no means is it a foolproof sign. Just, there's my thesis behind QCOM. I think we're going to see a big move to the upside or downside. Not quite sure which way it's going to be, which is why I bought the straddle. Considering the price action's been so thin, just been a pretty tight consolidation pattern. The options premiums weren't outrageous, so I was willing to purchase the straddle. Got it at $1.99, so 199 bucks per straddle. I did the 39 September, so I bought the September 39 call and I bought the September 39 put. So we'll see what happens. It's going to need to get a little break to the upside here to 40, at or above 41 is the first break even here, and at or below 37 is the second break even, and that needs to take place by the September 17th options expiration. So I need to get out of this range. Here's September 17th time frame. I need to get outside of that range by September 17th. So this price action needs to get a nice push to the upside or downside. Now it can do a quick move prior to expiration, and I can still have some nice extrinsic premium in these options, and I can exit the straddle for a profit as long as the move is big enough. I don't necessarily have to see it trading above 41 or below 37 by options expiration for this to be profitable. But best case scenario, I'm going to get a large move to say 43 or something by options expiration, or 35 by options expiration, so I can have a nice little double up here on this straddle. Just wanted to kind of give you my reasoning behind that, explain the trade, and if you have any questions, feel free to ask me either in my YouTube channel, youtube.com/tickertank, or visit me at tickertank.com and leave a comment, and I'll be happy to answer.